अब एक बार ज्वाइन करें ना, फिर देखते हैं। हाँ, ठीक। ठीक है। 15 70 85 हाँ। अच्छा, 85 ना करना। അവിടെ पर देख कितना आना बैठे हैं। हाँ, दुनिया भर के 25 400।
यस सर। शेयर
यस
कर
सर।
लीजिए स्लाइड।
ऑडिबल।
यस यस सर।
क्लियरली ऑडिबल ना?
Yes, sir, clearly audible.
ओके अरुण। ओके। सो लेट्स मी शेयर द पीपीटी आल्सो। ओके। स्क्रीन डॉक्यूमेंट एडवांस डॉक्यूमेंट।
On the screen, sir, you can see that share option, na, sir.
यस।
Yeah, yeah. Just click on that share.
करेक्ट।
Yes, yes, and just make it to full screen, sir. Yeah, yeah,
यस।
sir. Is it visible, sir?
नाउ इट इज
Yeah, yeah. Perfect, sir. Perfect, sir.
परफेक्ट।
Yeah, yeah. You can share, sir. It's perfect, sir.
श्योर। सो आई एम ज्वाइनिंग इन
Yeah, yeah. So
5।
you know, na,
या टेल मी।
yeah,
यस।
yeah. 5 minutes you can join, sir. You know, na structure. First of all, we introduce our CMD. Then your introduction is there, and then you can start, sir.
राइट राइट राइट।
So, next 5 minutes you can rejoin it, sir.
अराउंड 11 ना? अराउंड 11।
Yeah, 10:50 you can join, sir.
या बाय 10:55 आई विल ज्वाइन।
10:50.
10:55। ओके।
Yeah, 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 yeah. Yeah, no issues, no
Good morning, everyone. Welcome to our today's Subvention Meet. I'm your host, Yachika. Our topic for today is recent updates in GST. Our today's keynote speaker is Mr. Lalit Agarwal. We shall be taking notification, judgments, and circulars, which will be followed by question and answer session. Our agenda for today's Sadgutsan Meet is virtual inauguration by Dr. Sundar Kataria, evoking the blessing of deity, chanting of Gayatri Mantra, introduction of speaker, presentation by Mr. Lalit Agarwal, question and answer session, and then closing session. So Sadgutsan is conceived and led by Dr. Sundar Kataria, driven with a mission to elevate the quality, safety, environmental awareness levels of our industry. Sadgutsan is a series of educative, informative events aiming to eliminate professional on a possible solution to the current issues of industry and economy. Now, I'd like to give a brief introduction of Dr. Sundar Kataria. He is a chairman and managing director of International Certification Services Private Limited. His academic qualification includes doctorate in business management and mechanical engineering. His experience include Rajasthan Atomic Power Project, India's first nuclear power plant at RAPP, Rawatbata, Kota, built by Indian engineers, worked as a nuclear student scientist for 11 years and successfully completed and commissioned the plant. The first batch of engineers to develop Bombay High offshore oil and gas field, mega offshore complex platform, trunk and submarine pipelines, underwater inspection, and indigenization, oil and gas equipment, etc. DET, Norsk Radius World, largest classification society, worked for 17 years at a various capacity for the certification of fixed offshore installation, submarine pipelines, onshore project, and personal qualification, ICS. He is a founder of India's first certification confirmation assessment body established in the year 1999, provider of the total quality solution, certification of a management system, ISO, inspection testing, and training qualification of a personnel. His achievement and awards includes received a Lifetime Achievement Award for the contribution of the corrosion technologies from NACE International by NIGIS under NAC US. Social worker protection of a life, assess environmental and safety. Now I request Dr. Sundar Kataria to inaugurate our session virtually.
कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शत्रुबुद्धिविनाशाय दीपज्योतिर्नमोऽस्तु ते दीपज्योतिर्नमोऽस्तु ते शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः
Please join us for the recitation of Gayatri Mantra. Introduction of today's keynote speaker. His designation and organization is Chartered Accountant. His academic qualification includes BCom, Chartered Accountant, and CA Final Rank 90. His area of specialization and experience is specializes in indirect taxes, and his professional experience is of more than 12 years, which includes stints with the leading firms such as KPMG, Grant Thornton, and Luthra. He has also assisted companies in FTP related incentives, anti-invasion and intelligence matters, customs and FTP related advisories, etc. He has played prominent role in compliances, advisory, refunds, implementation of GST for many companies. Now I request Mr. Lalit Agarwal to take over from the. Over to you, sir.
Ma'am, screen is visible? Yes.
Sir, screen is visible properly.
Yes. So first of all, I want to thank International Conference Certification Services Private Limited, including Mr. Uh, Vaibhav and Arun Gaurji and their efforts to put up these virtual webinars on fortnightly basis. And this is the 214th virtual webinar under the series Satgun Sang Meet. It's my they have provided me this opportunity for the second time. I'm coming on this portal for the second time. Uh, I just want to thank CMD sir, Sundarji also. Starting the topic for today is recent updates in GST. As friends, as we all know that GST is new to the system, and since it's only been 7.5 years, it's been implemented. So there are very frequently amendments, notifications, and system-related changes are being notified by the government. So we will discuss these recent updates related to filing of returns, filing of some specific waiver and waiver schemes, amnesty schemes, or some relaxation has been provided by the government by the GST Council in last 3 to 4 months, and the process has been which has been amended on the GST portal also. So the whatever the process they have notified, we will discuss in detail. Also, there was 55th GST Council meeting happened on 21st December on 2024. So we will discuss the recommendation made by the GST Council in that meeting. We also, friends, starting with the happy news which we received last evening after regarding the extension of due dates for December 24 compliances. As we know, as we know that the GST portal was having glitches from on 9th of January till the late evening of 10th of January. So the government has issued a total of 6 notifications regarding extension of due dates. So the extended due dates for compliances are as GSTR1 monthly returns, with the due date actually is 11th of next month, which is 11th January today. The date has been extended to 30th of January. For quarterly return filers of GSTR1, the due date was 13th of January, which has been extended to 15th of January. Similarly, for GSTR3B monthly return filer, the due date was 20th of January, further extended to 22nd of January. Again, the quarterly return filers of GSTR3B, where the government has divided the taxpayers according to the state and UT. The government had extended the due date from 22nd January to 24th of January and 24th of January to 26th of January. If you can see, for Maharashtra and Karnataka, the due date I think has been remained same as 24th of January as an earlier date. For GSTR 5 return filers, which are non-resident taxable person, due date has been extended to 15th of January. Again, for ISD return filers, input service distributor return filers, whose actual date of return filing was 13th of January, has been extended to 15th of January. Similarly, the GSTR TDS deductor and return filer and e-commerce TCS payer filing GSTR 7 and 7 GSTR 8 respectively. The date has been extended to 12th of January. Now, the next area I'm looking to cover is there are certain advisories or GSTN updates provided by GSTN team on GST portal. So there are certain advisory which has been uploaded or implemented by the GSTN. So I'm discussing those at first. Friends, the hot topic today is the waiver scheme under Section 128A. So, as you know, in 53rd Council meeting, the government introduced a Section 128A where they provided waiver from interest or penalty or both for financial year 17-18, 18-19, and 19-20 if the full tax has been paid before 31st March 2025. Accordingly, they have to fulfill certain terms and conditions that the liability should pertain to under Section 73 only. Full payment of tax should be made before 31st March, and the benefit will be available only if the notice or order is pending for closure. So, as you know, there are three stages of litigation right now. First is issuance of DRC 1 show cause notice. Second is issuance of DRC 7 order. Third is APL 04 issuance of order by the appellate authority. Since the tribunal is not in place as of today, so there is no case relating to order by the appellate tribunal. Further, we have the writ petition option and special SLP filing before the Supreme Court. So government has covered first three state of orders which have been issued by the proper officer for FY 17-18, 18-19, 19-20. If the tax has been paid, then waiver of interest and penalty subject to payment of taxes before 31st March 2025. Now, the government has provided the procedure for filing of this application. So the government provided two sort of applications. One is SPL1, second is SPL2. SPL1 is applicable where the show cause notice has been issued, but or pending for order. SPL2 is applicable in other two cases where the DRC 7 order has been issued and APL4 has been issued by the appellate authority. And also there is one another scenario where the show cause notice has been issued under Section 74, but further rectified by the appellate authority or under appeal under Section 73, converted into Section 73. So all these three scenario the taxpayer has to file SPL 02. Now on GST portal, they have made available this schema for filing of SPL 2. So the procedure would be that navigate to services, go under user services and go to my applications. In my application, you drop down to and file and you will find application for waiver of scheme under Section 128A option. Once you click on that, click on the new application button, the further two option will come out. The two option will be filing whether we are looking to file SPL1 or SPL2. Since SPL1 is not available right now, it will be available on GST portal in near future. The SPL2 option we have to select and create an application. Friends, you need to know that the due date for filing of SPL1 and SPL2 is 3 months from 31st March 2025. So what the taxpayer has to do, they first have to pay the taxes before the deadline and then file SPL1 and SPL2 accordingly. After creation of application, a questionnaire will appear on the dashboard, which will be having 7 questions regarding the status of order, demand order, appeal filing status, whether any writ file has been filed or not, that application, or whether the withdrawal application has been filed or not, whether the order issued is under section 73 or 74, whether section order covered under section 75 or not, whether the demand order includes earnest refund or not. So friends, as you know, you must know that in case of earnest refund also, this waiver scheme is not available. Once you fill up this questionnaire, click on the next button. SPL2 form will display on the dashboard. Then it start asking the basic details like mobile number and email ID of the authorized representative. Similarly, when we file GSTR1 on filing the application on the filing the return, we got an option to select the who will be the authorized representative, representative or signatory. Accordingly, in SPL2, the same dashboard will appear. We have to select the authorized signatory and then fill up his mobile number and email ID. After that, the demand order details will appear, like against which demand order or APL4 we want to file our waiver scheme application. So this will ask the details regarding your demand ID number, date of issuance of order, section under which demand has been issued. Section means is 73 or and some other section. Then if the applicant has filed an appeal or writ petition already, then we have to, the taxpayer has to withdraw that application. So the withdrawal details will also be have to fill up. Then the financial year for which we are filing, the earnest refund details if there are any. Then detail of amount demanded in the order. Then if the total demand will appear for the amount waiver we are looking for, then out of that demand, if that demand includes section 16(4) related matter. So section 16(4) is the time limit for availment of ITC, and the government has separately provided a waiver in this scenario and subsequently inserted section 16(5) and 16(6), where they have provided a relaxation to avail such ITC for financial year 17-18, 18-19, 19-20, and 20-21 if this said ITC has been availed before 30th November 2021. So earlier in section 16(4), the due date for availment of ITC was the due date for filing of September month return of the succeeding financial year. So government has also provided relaxation in that case. I will discuss section 16(4), 16(5), 16(6 in subsequent slides. So since the waiver, the relaxation is already provided for section 16(4) separately, so we have to mention the detail of such waiver, such relaxation, and then the amount paid through facility. Because before filing SPL2 and SPL1, the condition is that you have the full tax has been paid. So before 31st March 2025. So we have to mention the full detail amount, tax amount, demand amount. Then if some relaxation is available under section 16(4), then further, if the tax has been already paid or not, if has already been paid, so detail of such payment. So this payment will include the detail like if DRC3 has been used for payment. Okay. So detail of that DRC3, like if the payment has been made against demand liability ledger, so that demand liability ledger details. Thirdly, while making the pre-deposits, the deduction must have been made from the electronic credit ledger or electronic cash ledger. So that reference ID numbers. So whatever the net waiver we are looking for the tax we have paid. So detail of tax paid should be matching with the total amount demanded. Then upload the supporting documents and file the application. The government has also stated that if we face any problem relating to filing of this waiver scheme, we may raise a ticket on the GST portal. So this is regarding filing of SPL02 form only. And friends, and for SPL01, there is no. For SPL2, there is for SPL1, the process has not been mentioned on the GST portal yet. But friends, as you know, for that SPL1 is applicable where the DRC1 has been issued but pending for order. Friends, this scheme is applicable, this waiver scheme is applicable for FY 17, 18, 18, 19, 19, 20 financial year. So there will be hardly any such case where the DRC1 has been issued but pending for closure. Because under Section 73, the due dates for issuance of order has already been expired and time barred. So in most of the cases, the DRC7 order has to be issued or DRC1 has been closed. So majorly, this waiver scheme will be applicable, will give benefit to cases where the DRC7 order, APL04 order has been issued. So according to these deadlines, the taxpayers may plan and collect the data and start and analyze their position, whether they are eligible for waiver scheme or not, and according take the decision. Similarly, for this waiver scheme, the government has issued a circular also. Because there were some clarification required, and accordingly, one circular has been issued numbering 238 32 2024, which has covered almost 15 to 16 clarifications regarding the eligibility of this scheme, regarding the payment of taxes, regarding the process has to be followed, regarding the eligibility of this scheme also. So I will discuss this circular first. So this circular states the first clarification sought was whether tax paid in full prior to introduction of Section 28A, where the benefit will be available or not. As you know, friends, Section 120 has been inserted after 53rd meeting in 2024, but cases are related to financial year 7, but it covers the financial years like for FY 17, 18, 18, 19, 20.
दोबारा अपने नाम में बोला करूंगा अरे ये हमने मेरे अनस्ट्रक्चर्ड में आनेंगे
So the taxpayer must have paid the taxes already before introduction of Section 128A. So it has been clarified that all taxes paid towards the demand till 31st March 2025 shall be considered. So all taxes paid towards demand till 31st March 2025 shall be considered whether that tax has been paid after or prior to introduction of Section 128A. Second clarification regarding that sometime what happened, tax recovered by the tax officer from other person on behalf of the taxpayer. The recovery they are making. So whether the benefit available for or not, if the recovery has been made from any other person, it is stated that yes, the tax paid by the other person shall also be considered for this waiver scheme. Now, friends, as you know, this waiver scheme is only for interest or penalty or both. Okay. So in some time, the taxpayer must have paid interest or penalty also at the time of during the proceedings of the case. So it has been sought for clarification that if interest or penalty has been recovered or paid by the taxpayer, whether that can be adjusted against the tax payable amount or it will be treated as whether the tax has been paid. So it is clarified that no, it is not a payment of tax. It is a payment of interest or penalty. So it cannot be treated as a payment of tax. Next clarification was regarding the tax has been already paid before, has already been paid, but notice issued only to interest or penalty. Because in some cases, like the taxpayer take a call that let's pay the tax first, okay, and interest or penalty I will pay only when the it is confirmed in the order. So the interest or penalty remains payable in many of the cases. So the clarification has been stated that yes, the waiver scheme is applicable, but interest waiver is not available where the interest or penalty has been mentioned in the notice regarding the late filing of return or delay reporting of supply invoices in the GSTR1. In these two cases, the interest waiver will not be applicable. Otherwise, yes, the tax paid already will be considered. And the same wording has been clarification has been provided in first clarification also, that all tax amount paid before demand has to be considered. Whether partial waiver available or not. So partial waiver means there are, let's say, four scenarios, four allegations in the notice. Okay, the two we are taxpayer is saying that I will accept three matters and will pay. One matter I will not accept and will not pay. So in that case, whether partial waiver, if the tax has been paid for three matters or three cases, will be available or not. So it is saying that no 100% tax amount means 100% tax amount, no partial waiver. Whether the notice issued for multiple period. So multiple period, let's say for FY 17-18 till March 22. So since waiver scheme is covering three financial years, and two financial year are such period which is on for which a waiver scheme is not applicable. So whether this waiver scheme will be applicable, waiver scheme will be applicable or not. So it has been clarified that taxpayer is eligible for waiver of scheme, but subject to full tax demanded for whole period in the notice has been paid, in the order has been paid. So since the tax period covered in the order is also out of the ambit of eligibility of this waiver scheme, then also the taxpayer has to pay full tax demand as per the notice. Okay. Then if the officer find that the taxpayer has paid the full tax demanded, he will reduce the tax liability in SPL 5. So when we will file SPL 1 or 2, the officer will accept that if he accept our application, then he will issue SPL 5 order for accepting of the application. Then after issuance of SPL 5, the remaining interest or penalty is payable within 3 months from the issuance of SPL 5 or 6. So remaining interest penalty will be for the period FY 2021 and 21-22 in our case. So if he pays that interest or penalty for the remaining 2 years, then the SPL 5 or 6 will be acceptable. Otherwise, the whole order of waiver become void. So the taxpayer has to take a cognizance that if the order is issued for, let's say, multiple period, they can file the application. They have to pay the tax for the whole tax demanded in the notice for all 5 years, let's say. Then file the application. After acceptance of the application SPL file, they will adjust the tax amount relating to first 3 financial year, and for remaining 2 years, they will ask for the payment of interest or penalty. That interest payable has to be paid within 3 months from the date of the issuance of SPL 546 accordingly. Otherwise, order will become void. Similarly, in case of multiple issues, including demand for earnest refund, whether benefit will be available or not. So friends, as I told you earlier, that this scheme is not available for earnest refund demands. So if, let's say, notice has been issued including the earnest refund demand also, so whether this this waiver scheme will be applicable or not. So it has been clarified that yes, the waiver will be available. So again, the same procedure has to be followed. You pay the full tax demanded, including for demand of earnest refund. File the application. The application will be accepted by the proper officer in SPL 5. Then he will generate the demand for earnest refund related matter and pay the interest, penalty, and the tax interest and penalty leading to earnest refund within 3 months. Otherwise, the whole waiver scheme will be void. Now, sometimes what happens that department file cross objections after the, let's say, DRC 7, APL 4 has been DRC 7 or APL 4 has been issued, the favorable order we have received. Okay, but department further file a cross objection and demand is enhanced, let's say. But when we have already filed the SPL 2 before 31st March or within the timeline provided, and then SPL is issued further. Then the original demand we have already paid before filing of the application, but additional liability we didn't pay within the time limit. So what will happen in that case? So the conclusion of proceeding is when the additional tax is paid within 3 months of the order. So whatever this additional liability comes out after the filing of cross objection, the taxpayer has to pay this additional tax demand within 3 months of the order of the cross objection filed. Otherwise, the order of waiver become void. If SPL filed is pending, SPL filed before the Supreme Court is pending, then what the taxpayer has to do? To withdraw the SPL file and then file SPL 1, 2 along with the proof of filing of SPL. Whether IGST and compensation cess will be included. Yes, the waiver scheme is also applicable for IGST and compensation cess related interest and penalties. Transitional credit matters, yes, available. Waiver of penalties under other provisions, late fees, redemption fees, etc. So the waiver scheme is for penalties under section 73, 122, 125, etc. Late fees and redemption fine is not covered. Whether payment can be made utilizing ITC, input tax credit, or full payment has to be made through electronic cash ledger. So it has been clarified that ITC can also be used for payment of tax. Whether import of IGST payable under Customs Act is covered, clarified that no, this is not available for this waiver is not available for customs related matters. Friends, as I told you earlier, there is a retrospective insertion of section 16.5 and 16.6 for availment of ITC timeline. So how it has to be treated since the order has been issued, including the section 16.4 and 5 also. So it has been stated that while filing the SPL2, as I told you in the SPL2 form, that separate column will appear where we can state the amount note payable under section 16.5 and 16C, and the net amount only we have to pay before the due date. Now, sometime what happened, these provisions were included in the after July 2024 only, but tax has been already been paid against the order through DRC3. So in that case, it has been stated that link the DRC3 with the demand liability, so that adjustment of tax against the waiver amount can be done. So the applicant has to file one form DRC3A available. 28A waiver scheme. The second major relaxation was provided regarding the ITC limit (2021) before 30th November 2021, but the order for FY 17-18 for this financial year has been issued stating that ITC has been availed after the due date, earlier due dates, then the rectification application for such order can be
Hello.
filed in the portal.
Yes, the PPT is not visible. Kindly share the PPT, sir.
1 second. Now is available.
Yes, sir, it is visible. Thank you so much.
Arun, visible now?
Sir, it is visible.
Yes. So this application has to be filed uh, along with the one Annexure A. So Annexure A will prescribe the details of such order issued or the detail of the case, then along with the order details, your written filing details. So this Annexure A has to be filled up along with this rectification application, and this rectification application has to be filed within 6 months from the date of issuance of a notification. So government issued one notification numbering 22 by 2024, dated 8th of October 2024. So that this application may be filed by taxpayer within 6 months from the 8th of October 2024. And the proper officer, after going through the application and document submitted, has to issue a rectification order within 3 months from the date of application. So this functionality is available again under the dashboard, services, user services, my applications. Click on my application. Then in the drop down list, the option for application for activation of order will appear. Click on new application. Then further, once we click on the new application, a dashboard will appear, which will be requiring the details relating to case number, your financial year, the reason for application filing as such. So select number or order number field, the order number for which you wish to rectify, order issuance date and tax periods. Grounds of rectification mention that application of rectification of order under notification number 22 by 2024 dated 8th October 2024. Then choose file. So while uploading the document, we have to upload Annexure A as a supporting document. Then verify the details and file the application. The on GST portal, a separate hyperlink has been provided to download Annexure A also. Now, one circular has also been issued regarding the section 16.4, which I will discuss here. So this circular number 237 was issued uh, parallel to notification number 22 and advisory. So it generally provided clarification regarding the various steps of notice and order, and accordingly the further course of action which may be taken by the taxpayer and the officer. So friends, as you know, the first process for initiation of litigation under GST is the intimation. So if the proceedings of wrong availment of ITC has been initiated through DRC 1A, but demand notice has not been issued. So in that case, the notice is open for closure for order. So the taxpayer may submit his reply or stating the section 16.5, 16.6 and this relaxation scheme, and accordingly the officer will take cognizance and take further appropriate action. So that means the matter will not be so the no order will be negative order will be issued against the taxpayer accordingly. Similarly, DRC 1 notice has been issued, but order has not been issued. That means the taxpayer still has option of filing the reply against the DRC1. So that taxpayer again may mention the section 5, 6 these provisions in his reply, and accordingly adjudicating authority may take cognizance of the reply and pass the appropriate order. Third stage is after the issuance of, let's say, DRC 7 order has been issued and appeal has been filed before the appellate authority. In that case also, the the taxpayer may submit additional grounds of appeal at the time of personal hearing, and he may remind the officer, the appellate authority, regarding these provisions. So appellate authority will take cognizance of these sections before passing the order. But the next step is where this rectification order application will come into picture, where the order has been issued or order for APL 4 after appellate authority has passed also, but appeal has not been filed yet. So this advisory also and this rective is and an XRA relating to in such scenario. So in that case, file an application for rectification of order within 6 months from the date of notification, that is 8th October 2024. Upload the XRA, then along with the application. That process on the GST portal I have already discussed in the advisory section. Rectification shall be dealt by the officer who has the original order within 3 months. Then here they have specifically mentioned the principle of natural justice has to be followed, because sometime whatever the PH has not been provided, or taxpayer sometime also does not ask for the personal hearing while filing the reply. So the appellate authority has to be has to follow the principle of natural justice in such cases. Further, even although the let's say the negative order has been passed, so the taxpayer has the retain the right to file appeal against such rectified order. So this has been clarified regarding the section 16(4), 5 and 6 procedures. Friends, a major change has been provided, has been advised in table 12, which is regarding the uploading of HSN rating details while filing GSTR 1 and 1A. Friends, as you know, as of now, HSN code for goods and services is mandatory for reporting as 4-digit or 6-digit according to aggregate annual turnover of the taxpayer. If the turnover is less than 5 crore, then 4-digit codes, and if aggregate turnover exceeds 5 crore, then 6-digit HSN code. But as of now, but in the, while for filing of this data, it has been advised that for the return period 2000 January 25 onwards, please take a note that for the January 2025 onwards. So whatever in future, whenever you filing the returns for January 25 GSTR 1 and 1A for this tax period, the taxpayer has to follow this advisory. So what changes has been made from current scenario to this new scenario is there will be no manual entry of HSN codes. Today, while while filling up the data in table 12, the taxpayer may fill up manual data regarding HSN code and the taxable value and the tax IGST, CGST, SGST or SAS, whatever accordingly. So this manual entry has been removed. Friends, as you know, when we fill up GSTR 9, outward outward supply HSN code is mandatory there also in table 17. So the same procedure has been introduced in GSTR 1 and 1A also. In GSTR 9, we have to drop down the HSN code. We cannot manually enter there anything from our behalf. So the same HSN code has to be selected from the drop down list. The description of goods will automatically come up there. Further, now the table 12 will be bifurcated into two parts for B2B and B2C supplies separately. So because the GSTR 1 contain separate tables for B2B supplies and B2C supplies, accordingly, table 12 will be further bifurcated into B2B and B2C parts. And lastly, that validation of taxable values and tax amount involved in the same has been also been introduced. Friends, the same structure is also implemented in GSTR 9. if we, let's say, if I mention 100 rupee as a my taxable supply and tax rate I select 12%. So my total outward tax payable under all four heads, IGST, CGST, SGST and cess, should not be more than, should be equal to 12 rupee. 12% on 100 rupees, 12 rupee tax. Okay. So whatever the amount tax amount I will mention should be equal to 12 rupee. In GSTR 9, they have provided a gap of, let's, 10 rupee as a standard mismatch can be there, but not more than that. So same validation of tax supplies and tax amount involved is introduced in table 12 also. Further, it has been stated that the taxpayer may download the updated list of HSN and SSC codes from along with description from the portal, so that they can exactly select the HSN code of their supplies, and there should not be any misdeclaration in the table 12. And friends, it will help in consolidation of data while filing the GSTR 9. So if you see the HSN reporting table, the onus or the reporting scenario has changed from last 1.5 year. They starting with the manual entry, made it to mandatory, from data available on the portal. Then bifurcation into B2B and B2C also. Earlier it was not so. Then exact description according to the portal only, not as per the taxpayers data. Validation of tax amount and supplies basis the B2B and B2C supplies also. So there cannot be a mismatch in outward tax payable and actual outward tax declared as per the rate of supply. So as per the advisory, the three phases of HSN summary updation has complete. This is the third phase of HSN summary regarding data, and fourth phase is still yet to come. Next advisory is regarding the biometric based Aadhaar authentications. Friends, as you know, this biometric based Aadhaar authentication has already been implemented in 19 states and UTs across India. So but this advisory is regarding to Rajasthan state. This advisory is also is similar to the advisory issued earlier to other states and UTs. Friends, this Aadhaar-based authentication will be roll out in Rajasthan from 7th January 2025 onwards. The question come, why this biometric-based Aadhaar authentication has been implemented. So it has been stated that there are some applicants identified on common portal based on data analysis and risk parameters. So when we file the REG6, REG1 application, registration application, the system the system will analyze the data regarding the applicant and the risk parameter. Accordingly, the portal will identify whether this OTP based Aadhaar authentication process has to be followed, or biometric based Aadhaar authentication and document verification process has to be followed with this registration application. This has to be done by the system only based on the risk parameters. So once the REG1 application is filed, the applicant will receive either OTP based Aadhaar authentication or biometric Aadhaar authentication, a link through a mail. Accordingly, if we receive the link of email through link in on email for OTP based authentication, so the same earlier process will be followed. Existing process will be followed. If if he received a mail for biometric based Aadhaar authentication, so he will be fixed up with the appointment at GST Suvidha Kendra GSK. Accordingly, the applicant uh, can book the appointment and visit the designated GSK provided on the email and get confirmation for appointment and visit on chosen schedule. He has to carry Aadhaar card, PAN card, original copies, appointment intimation, and confirmation email, and upload all the document along, and whatever document he has uploaded along with the application, he has to carry in original. Once the biometric Aadhaar authority process is done, the ARN will be generated, and the same process will be followed further by the authorities, as in OTP-based Aadhaar authentication. This time limit we have discussed, time limit waiver in 238 we have discussed. Friends, there are some circulars issued after the 55th council meeting on 31st December. So total four circulars has been issued in that regard. So now I'm discussing those circulars. Friends, first circular is relating to e-commerce operator. Friends, as you know that e-commerce operators provide two sort of supplies. One, whether they purchase and sell as an e-commerce operator, such as your cloud kitchen, housekeeping services, cab operators. Okay. And second is where they are charging the platform fees only or commission for using the platform by the suppliers. So in first case, they are paying 100% of outward tax liability through cash. In second scenario, they are eligible to use the input tax credit, use input tax credit available for inputs and input services for their own account services such as platform fees and commission. So they are charging outward tax on such commission and fees received and utilizing the ITC. But however, this has been litigated that such ITC availed for their own account services will be eligible, is required to reverse under section 17102 because they are providing one-to-one supplies also, which is where they have to pay tax through all 100% tax through electronic cash ledger. So whether the proportional reversal of such ITC availed on his own account services is required has to be done or not, it is already a litigated matter. Now this has been clarified that no such reversal of proportional ITC is required by the e-commerce operator under section 17(1) and 2. He can fully avail such ITC and utilize against his outward supplies made against own account of services such as platform fees and commission. So it is a good news for the e-commerce operator that they can fully avail the ITC in relation to such services. Second circular number 241 is regarding to X-Works contracts. So friends, this is regarding the transport industry where a dealer procures vehicles from a OEM factory gate. However, the delivery according to the agreements, X-Work contracts completed at his factory gate of the OEM only. All insurance expense, transportation expense are borne by the dealer. Though there may be a scenario that OEM is delivering the goods, vehicles from his own premise to the premise of dealer, but the onus or the ownership has been transferred by the OEM at his factory gate only. In this scenario, dealer is availing ITC on the date the vehicles are billed to him by the OEM or the manufacturers. But the officers are taking a view that ITC can only be availed when they are physically received by him at the premise of dealer. In this regard, the notice has been issued for contravention of section 16(2)(b), because section 16(2)(b) talks about, as friends you know, there are total 4 conditions mentioned in section 16(2) for availment of ITC. So the second condition is the received of the goods by the recipient of goods for availment of ITC. So the officers are saying that the goods has not been received at the premise, so he cannot, the dealer cannot avail ITC on the date of vehicles are billed to him. he can only avail the ITC when vehicles are received at his own premise. So this is the background of uh, this query. Though in this regard, it has been explained that the language of section 16(2)(b) state that goods has to be received by him along with the ownership. So the contention was the ownership was received when the ownership has been transferred to the dealer. So it has been explained in section 6. There is an explanation to section 16(2)(b) also already in the act, that the registered person can be considered to have received said goods at the time of such handling over of the goods by the supplier to the transporter at his factory gate for their onward transmission to the said registered person. So the dealer should be treated as that he has received the goods at his factory, at the factory gate of OM only. So he has received the goods and justify the condition of section 16(2)(b). However, it has also been clarified that if the goods which has been received are not for non-business purpose, or lost, destroyed, stolen, written off, or disposed of, then ITC will not be available, because he is not the dealer is not fulfilling the condition of availment of ITC, eligible ITC, and it's a block credit under section 617 of the CGST Act. So yes, the ITC will be available if it's a business purpose transaction at the factory gate of the OEM. The next clarification is regarding the place of supply for online services. Friends, in case of online services provided to unregistered person, the place of supply is the state of the recipient of the service. So in this case, the supplier has to mention the state name of the recipient of service on his invoice. So, but it has been noticed that many suppliers are not mentioning the state name on the invoice, which so this resulted that the exact place of supply cannot be identified, and this resulted into flow of revenue to the wrong state. Let's say I'm providing services from Delhi to I'm a registered online service provider in Delhi, and the recipient of services is in Mumbai. So if the recipient of service has mentioned has not provided me the exact state in which he is, so I will be declaring place of supply as Delhi only. So the tax charge, GST charge, will be going to Delhi state only. However, if I would have taken the exact state from the recipient, which is Maharashtra, then I would have to charge IGST, and revenue should have been bifurcated according to the exact state by the government internally. So to avoid this revenue flow, it has been clarified that it is mandatory to record the name of state by the by the supplier of services on tax invoice. There cannot be any uh, mechanism. There is no there is no waiver to the suppliers. They have to follow this procedure, since this process has already been there in place. They have to mandatory required to record the name of the state of the recipient of service on tax invoice, irrespective to value of supply or service, and declare place of supply in the GSTR 1 and 1A filed accordingly. If let's say supplier has to follow a proper mechanism, ensure that he has collected the details regarding to the state of the recipient from the recipient who is an unregistered person. And if he still do a non-compliance, then a penalty may be levied under section 122(3)(e) on the such supplier. So it is mandatory. It has been focused that the supplier of online services has to mandatorily follow this procedure. there cannot be any lapse. So they have to make ensure that state name has been exactly received from the recipient of service, or if they are unable to get the address of the recipient of service, then they should maintain the records of such communication. Otherwise, the authorities may levy penalty for
इंस्पेक्टर का वो है
wrong information.
देयर इज अ रिक्वायरमेंट विजुअल एक्टिविटी उसका आई चेक होना चाहिए बराबर इंस्पेक्टर का वो नहीं किया आपने आई टेस्ट ही नहीं किया वो कलर ब्लाइंड है और
Yes. The next clarification circular is regarding the treatment of GST treatment of vouchers. Friends, it has been clarified that vouchers cannot be considered as a supply of goods or services as a service, since they are not a transaction in money, and neither nor they are actionable claim under the GST law, as actionable claims has been defined. So they cannot be treated. They cannot be treated as supply of goods, nor they cannot be treated as a supply of services. The further clarification has been asked regarding the there because regarding the distributors of such vouchers. So it has been clarified that if the vouchers has been distributed on principal to principal basis, that means they are working as a traders. So it is a pure trading activity of the vouchers. So this will be the treatment under GST will be same. Such trading will not constitute either supply of goods or services under the GST law. Thirdly, the vouchers distributed by agents on commission basis, let's say. So in this case, it has been stated that yes, GST will be applicable only on the commission amount or fees this which they have received, not on the traded value. Sometimes the voucher issuer provide the support services such as advertisement, marketing, such services to enhance the uh, base of the buyers or to marketize these vouchers. So in this case, voucher issuer uh, provide the support services and issue a tax invoice to the uh, tax invoice. Accordingly, in this case, it has been stated that liability he is liable to GST, since support services are not vouchers in support services are not vouchers. Sometime what happened that vouchers remain unredeemed. So it has been stated that amount retained for unredeemed vouchers cannot be construed as consideration for supply, and again not taxable. So vouchers related uh, uh, voucher related treatment under GST will be that it's neither a supply of goods nor is a supply of services. However, if some services has been provided in relation to vouchers, will be treated and taxable under GST. Friends, coming to 55th GST Council meeting recommendations. Yes. So this 55th council meeting was held on 21st December 2024 at Jaisalmer, Rajasthan. So various policy recommendations were made, including the change in GST rates, measures for trade facilitation, streamlining of GST compliances, and law and procedures regarding matters. So in this regard, the Ministry of Finance issued a press release and further issued four circulars after the recommendation of the council. So these four circular I have already discussed. Now, now we will discuss the other remaining recommendations of the GST council meeting. So first, I will discuss the measures for facilitation of trade. So first recommendation is regarding treatment of goods warehoused at SEZ and FTWZ. So it is recommended to insert clause AA in entry 8 of Schedule 3 retrospectively from 1st July 2017 that if goods cleared before if goods warehoused at SEZ before clearance of export or DTA will neither be treated as goods or service. So this has been aligned with the customs bonded warehouse, and this will bring clarity, eliminate uncertainty, and reinforce a consistent approach to the goods warehoused at under GST. Further, waiver of late fees for GST and INC has been introduced. Friends, earlier there was a misconcept that not there it was not clear whether the GST and 9C whether the late fees under section 47(2) will be leviable on GST and 9C or not, because it mentioned that annual return related for annual return only under sections for only annual return the late fees are applicable. It has been recommended that late fees will be applicable for delay filing of both annual return and 9C also. Annual return include 9 and 9C both. However, it has been further recommended that for FY 17-18 to FY 22-23, there will be a waiver of late fees for 9C equaling to if so waiver will be after that day, waiver for late fees will be exceeding the late fees payable up to the date of filing of GSTR 9 of that said GSTR 9C, and all 9C has been filed before March 25. So let's say for FY 22-23, the due date for filing of GSTR 9 was 31st December 2023. The client, the taxpayer has filed the GSTR 9 but failed to file GSTR 9C. The GSTR 9 was filed on 7th January 2024. So the late fees for GSTR 9 was paid for 7 days and 9C has not been filed yet. So it has been recommended that the late fees for 9C also has to be paid for those 7 days for the period 1st January 2024 to 7th January 2024. However, for the period 8 January 24 onwards will be waived off if 9C has been filed before 31st March 25. So it has been recommended that the late fees paid for GSTR 9 has to be paid for 9C also, since they both are leviable to late fees. Since the clarity was not there or concept was there, so the waiver has been provided for the period after the filing of GSTR 9 here. But condition is the GST 9C has to be paid before 31st March 2025. Similarly, a new provision for track and trace mechanism will be introduced. So it has been recommended that for some specified commodities, A unique identification marking system, UIM marking system, will be affixed, and for identified such commodities which are evasion prone, and this UIM will be used throughout the supply chain. So this section 148 is yet to be notified, and detailed of such uh, specified commodities is yet to be revealed. Similarly, uh, there is one recommendation is regarding the retrospective amendment in section 17(5)(d). Friends, as you know, there is a Supreme Court judgment in this Safari Retreat case, where the case was relating to the definition of word plant or machinery, or plant and machinery. So closing all the differences, it has been recommended that the word plant or machinery will be replaced with plant and machinery in the in section 17(5)(d). Further, there is a reduction in pre-deposit in case involved demand of penalty without tax. So there may be certain cases, there may be certain notices where only penalty has been levied or has been demanded in the notice or order. So while filing an appeal before appellate authority against DRC 7, if only penalty is mentioned, so the taxpayer has to pay 10% of the penalty amount as a pre-deposit, not 25%. Secondly, a new proviso will be inserted for filing an appeal before appellate tribunal. One new section 1128 will be introduced, where setting the amount as 10% pre-deposit only for filing an appeal before appellate tribunal. Uh, Friends, next recommendation is regarding input service distributor. Friends, in section, so ISD is covered under section, the definition of ISD is section 261, and the process for ISD distribution is section 20, and also rule 39 1. So in current scenario, existing provisions, they said that RCM relating to section 9 and 93 and 94 only. So that means the RCM in relation to intrastate supplies only is been covered in the ISD mechanism. So to align with the IGST Act, so it has been stated that RCM paid on interstate supplies will also be covered for input service distribution. Since, friends, we know that ISD will be effective from 1st April 2025. So these changes which in the act and in the section and rules are recommended. Now, others three recommendations are only regarding the uh, streamlining of the process. So first is regarding the payment process for unregistered person. Friends, section 80, rule 87(4) provides that in case of unregistered person required to pay tax, the taxpayer will has to issue a temporary identification number. So friends, this scenario generally arises in case of e-way bill related matters, where a transporter or my vehicle is detained at a state where the supplier or recipient are not registered, but still they have to make a payment of penalty for release of their vehicle. So in that case, since the supplier or recipient are not registered in that state, an temporary identification number is issued under Rule 87(4). So now this rule has been amended, and a new rule has to be inserted along with that for modification in RAG 12 for this, and further Rule 16A will be inserted to allow the taxpayer to generate TIN number in such scenarios. Further, definition of local fund and mutual fund, municipal fund will be inserted in section 269 relating to definition of local authorities. And and lastly, a composition dealer who file CMP 024, CMT 24 for registration purposes, he will be this process will be inserted in rule 19.1 also. Rule 91 is applicable for routine taxpayers as of today. So this CMP2 form is not there, is not mentioned there. So once this CMP02 form is aligned with rule 19.1, then the as a category, when they change from to registered person, so this category they will be they can file through RG 14 form. So this is just simplification of procedure for composition dealers. Again, friends, as you know, one invoice management system was introduced for availment of ITC through GSTR 2B. However, this IMS system was in the form of advisory only. It does not contain any legal function. It does not contain any legal backing. So it has been proposed now uh, uh, to provide legal backing to such a GST framework. So related note sections and rule will be uh, will be inserted or amended. So the relevant rules which will be amended are section 38 and rule 60, and section 34(2) regarding reversal of ITC in case of issuance of credit note. Rule 67B, adjusting the tax payable amount outward tax liability through issuance of credit note. Section 39(1) and Rule 61 for filing of GSTR 3B. This is the GSTR to be available on the portal. So basically, since IMS was not having any legal provisions in the GST Act, now the relevant section and rules will be amended under the GST Act and under the GST law. The last section is our GST rate exemption change and clarification provided uh, in the council meeting. So so gene therapy and system and equipment goods procured for long range surface to air missile systems, import of equipment and consumable for International Atomic Energy Agency will be exempt. Okay. Further, further the contribution made by general insurance companies to motor vehicle accident fund will also be exempt. Now, the major one of useful clarifications exemption is regarding the in case of renting of commercial and immovable property by unregistered person to composition dealer. So composition dealer is not required to pay under reverse charge mechanism. Friends, as you know, that renting of commercial property by unregistered person to a registered person is liable to reverse charge. However, it has been recommended that if the recipient is a composition dealer, then no RCM will be payable. No tax under RCM will be payable. Further, some rate changes has been introduced, such as rate changes in fortified rice kernel, which is classified under HSN 1904. It is recommended that it will be taxable at 5%. Supplies to merchant exporter. Friends, so for supplies to merchant exporter, in that case, supplier will levy 0.1% tax as IGST or CGST plus IGST accordingly. It has been stated that compulsory cess will also be payable at 0.1% on such supplies. Then food inputs for food preparations, which will be free distributed by government by government to economically weaker sections. That food inputs will also be taxable at 5% only. Further, it has been recommended that in case of sponsor services. So friends, earlier the provision is any services provided to body corporates or partnership firms. Relation to sponsorship services, the body corporates or partnership firm is liable to pay tax under reverse charge mechanism on such sponsor services received. However, going forward, once it's notified, the sponsor services provided by body corporates. So that means in place of any person, the exclusion will be for body corporates. So these body corporates has to pay tax on forward charge basis, and the recipient will not pay tax on reverse charge basis under reverse charge. Thirdly, the major overhaul has been done in case of restaurant services. Friends, as you know, in current scenario, the word declared tariff has been used for hotel industry. So declared tariff in relation to hotel rooms. So if hotels rooms are providing hotel rooms having declared tariff exceeds 7,500 rupee, then 18% tax is applicable on restaurant services. Now the declared tariff word has been removed. So the word will be actual value of services, because declared tariff was word was creating confusions. Uh, So because declared tariff and the actual value received by the hotels was different in some cases. So actual value of supply will be considered for identifying the tax rate, whether if it exceeds 7,500 rupee plus, then 18% with ITC option is available with for the restaurant. They has to follow 18% outward tax plus they will be eligible for ITC. If the actual value of hotel room is 7,500 rupee or less, then restaurant has an option, has to follow 5% outward tax without ITC. But in second scenario, the hotels have now has been provided an option to levy 18% GST with ITC option regardless of the price of their room. So accordingly, the restaurant service providers and the hotels may verify and review their books and take a decision whether they want to follow 18% with ITC option or 5% outward tax without ITC option. Now, the last rate change is regarding the sale of old and used vehicle, including EVs. So this will be regarding the so it has been stated that GST will be applicable on margin only. So margin means the sale value minus depreciated purchase value. If it's a positive value, then only on the positive margin the GST will be applicable at a rate of 18%. Otherwise, if margin is negative, then GST will not be applicable, not payable. Further, this sale of old vehicle case not applicable for unregistered persons. So if vehicles are sold by unregistered person, then GST is not applicable at all, irrespective to margin value. So here the rate has been increased from 12% to 18% for all old cars, used vehicles, including EVs. So earlier, for some old vehicles, the rate was 12%. Now it has been done to 18% in all cases. Then there is a clarification. So this is our last slide. Uh, Clarification in GST rates. So here the most short clarification is regarding the popcorns. So in popcorns now we have three different rates subject to their packing, labeling, or their ingredients. So it has been stated that popcorn mixed with salt and spices and pre-packaged and labeled. So salted with salt and spice and packaged and labeled, tax at 12%. If salt and spice is there, but packaging is not there, in openly they are selling, not a packaged one, then 5% is there, GST rate. However, popcorn is mixed with sugar content, then the GST rate will increase from 5 or 12% to 18%, irrespective whether they are sold as a packaged or non-packaged food. Further, it has been clarified that fresh green or dried pepper and resin, when supplied by an agriculturist, will be exempt from GST. Autoclaved irritated concrete blocks containing more than 50% fly ash classified will be under HSN 6815 and taxable at the rate of 12%. Now, one clarification is regarding the SUVs. So there was an introduction, there was one explanation added, inserted in 2023, 26 July 2023, regarding the levy of compensation basis the ground clearance of the such SUVs. So it was inserted that a motor vehicle with engine capacity exceeding 1500 cc with a length exceeding 4000 mm and ground clearance of 170 mm and above, then only a compensation cess of 22% will be applicable. And this compensation of 22% will be applicable from 26 July 2023 only, not retrospectively. So that means the explanation regarding ground clearance inserted in section in entry number 52B will be applicable from 26 July 2023. Further, it has been the GST has been exempted on RBI regulated payment aggregators, but payment gateway and other fintech services which do not involve settlement of funds is not exempt. There is a clarification that penal charges collected by bank and NBFC for non-compliance on loan terms will be exempt under GST. Friends, this is all from my side. If you have any questions, we may discuss. Sorry.
Thank you, Mr. Agarwal. I request the participants to please put your questions in the chat or unmute and ask the questions. So we have one from Mr. Aditya Bansal. He's written, can you elaborate changes with regards to RCM invoices timeline as per new rule 47A and the reporting of RCM invoices in GSTR 1 and GSTR 3B?
Can you repeat, ma'am, again?
He's written, can you elaborate changes with regards to RCM invoices timeline as per new rule 47A and the reporting of RCM invoices in GSTR 1 and GSTR 3B?
Yes. So this RCM rated invoice has to be issued before on monthly basis. So a taxpayer may combine all such RCM transactions in one invoice and may self-issue the invoice. So he is not required to issue a separate invoice for all RCM related transactions. He has to declare such a document number in document series and table number 13 of the GSTR 1. There is no separate declaration in 3B because RCM related ITC we can claim separately in table number 3, 1C and B accordingly. Because RCM is already outward payable, so that liability only comes in GSTR 3B, and ITC we can claim in the scenario which we are following as of now. But it is just a compliance that a taxpayer has to follow for claiming of RCM, that they have to issue such self invoice and declare that self invoice in GSTR 1 also in the document series column table.
Thank you, sir. He's asked one more question. Can you elaborate more on 17.5? Can we take now ITC on factory building construction as per Safari retreat judgment?
Sir, if you read sections 17.5D, so it says that plant or machinery word was there. Okay. Now they have inserted to change this word to plant and machinery to overall the judgment of Safari retreat judgment of Supreme Court. Okay. Now it has to be rechecked. It has to be gone through the definition of plant and machinery, and accordingly we can decide whether the eligibility of ITC is there or not, because this judgment which we are talking about has been overhauled now. The base of this judgment has been overhauled.
I request participants, if you have any questions, you may please unmute yourself and ask the questions or put it in the chat box. So we have one from Sandeep Kumar. Do we need to raise RCM invoice for services on which ITC is not available, not claimed by taxpayer?
Yes, it has to be issued for all RCM payable by the taxpayer. Eligibility and ineligibility is the second scenario while availment of the ITC in GSTR 3B. But the self invoice document has to be issued for both the scenario, whether ITC is eligible or not. Yes.
Any more questions? Sir, I request you to please stop sharing the screen. Thank you, sir. Participants, if you have any questions, please put it in the chat box or unmute yourself. We'll wait for further 2-3 minutes, and otherwise we'll proceed with the session.
Thank you, everyone.
Our next session shall be on 18th January 24. In January 25, and will be taken up by Ms. Meera Joishar. She shall be taking the tax implication of moving in and out of India, taxability in multiple jurisdictions compared to India, tax planning strategies for studying and working abroad. ICS is pleased to provide you with all its research and development in integrated management system, excellence in education management system, ISO made easy in Gujarati, Marathi, Telugu, and Hindi. You may please contact Ms. Sushma Kindalkar on the given number for reading any of these books. Feedback form. Please register on our website and please give us your feedback for us to improve further. Thank you for being part of this Sadgun Sangh on recent updates in GST. For today, we officially declare the closing of the ceremony. Thank you everyone once again. Have a nice weekend.
Thank you, Mansi.